Good morning. Well, yesterday we saw the Aussie share market pop to a 6-week high after rising 1.8%, and that collectively means the ASX 200 is now up 22% from its March lows. But today it looks like some of those profits could be trimmed off the table as the futures are suggesting a fall of 1.5%. Now it comes as US shares behaved quite flightly, falling into the red in the final hour of trade on the back of news reports that raised concerns about that potential coronavirus vaccine from the company called Moderna. Now, in corporate news, retailers reported a rise in sales, but costs rose too to keep up with surging demand. Home Depot, their sales rose 7% in the first quarter, but their net income fell 11%. Now, Home Depot their shares ended 3% lower. Walmart's Q1 sales up 10%. E-commerce sales up 74% for the retailer, but they hired an extra 200,000 staff to keep up with demand, and because of that their expenses rose $700 million. Now Walmart shares ended lower by about 2%. All in all, the Dow was down 1.6%, the S&P losing 1.5%, and the Nasdaq lost 0.5%. Now in Europe, a little different. The German DAX rose while the other markets lost steam. On the commodity front, the oil price has maintained that $32 mark. The gold price has continued to push higher. It's up now at $1,749 an ounce. The iron ore price is continuing to make green tracks. It rose 1.6%. It's now at $86.84. And in terms of what to watch today, well, Australia's iron ore majors should see another kick as iron ore demand is continuing, and that's supporting the iron ore price lower, which is why yesterday we saw BHP shares rise 5.9%. Fortescue Metals up 4.4%, settling at an all-time high of $13.87. Rio Tinto also rose 4.7%, so keep an eye on those guys today. Sydney Airport's SYD just reported April passenger numbers falling almost 98%. No big surprise given the travel restrictions. Another one to watch, Australian Agricultural Co, AAC. They just announced a full-year profit of $15.4 million, a massive swing up from the prior loss of $22.9 million for the same time last year. Now, their earnings also soared to $80.1 million, another recovery from their negative earnings the same time last year. AAC also did not estimate FY 2021 performance as yet. Now for a trading idea, well, Bell Potter reiterated Avita Medical, AVH, as a speculative buy with a price target of 81 cents, and that implies 78% share price growth for Avita Medical in a year from yesterday's close of 45.5 cents. Now, it is a speculative buy. This may carry high risk, although its shares are tipped to grow over 70%. The company is still very much in its growth phase. It doesn't have free cash flows and it's not really generating earnings as such, but that doesn't take away from the fact that the company is doing extremely fantastic things and helping to transform many lives across the globe, particularly those recovering from severe burns. Now, Avita has applied to be also listed on the Nasdaq in the US, which will allow the company to raise more capital to fund its operations, which are based in the US. I'm Jessica Amir with Bell Direct. Happy trading and stay safe.